Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's May 31st here, Wednesday. We got a few economic news releases scheduled for today, and we'll delve right into it. We'll start with the ADP employment number. This is kind of the private sector jobs for the month of May. So last report, we had a really good one, but it was revised 41,000 jobs lower. So April jobs number was revised lower down to 163 new job creations. Now, for the month of May, we came in 178 here. We'll talk a little bit more on this. Actually, I'll probably be putting it on Twitter, so stay tuned and maybe listen at the very end in regards to Twitter here. But also, we got the GDP. This is the first revision. We'll get our final revision next month in June. But the initial report came in at 2.3%. It was expected to remain at 2.3%, and it had a slight tick down to 2.2% so far for the first quarter GDP. Now later today, by 11 o'clock Pacific Standard Time, the Fed Base Book will be released, and this will give us a gauge as to all the different regions as to the output in the economy and such of that nature. So help give us a little bit more insight as to how things are going across domestically, and where the Fed is getting their data and such. So let's kind of move forward here to the headline news. And right now, the stock market is up. The Dow is up near 300 so far this morning, kind of making up for lost ground yesterday after the big thing regards to Italy and Spain with the government uncertainty. So today they're kind of shrugging that off. Italy, they're still going to be there, especially Italy. They basically have an interim government that will probably have an election coming September, and it's kind of anti-establishment type of anti or interim government, and that could raise concerns because that might be their motive to maybe possibly leave the EU and such. So again, that may be something down the road we might see later on. But for the time being, they're kind of shrugging off. The big item today is actual oil. OPEC met and basically said that they're not going to up their current production levels to compensate for the sanctions placed on Venezuela and for Iran. So right now, oil prices rose as a result of that, and that's what's driving the markets so far this morning. And of course, recouping the sell-off yesterday, coupled with that. So let's see how the bond market is affected. We had a nice run yesterday. As you see, we were testing the 100-day moving average, settled in just below that. I think we were up about 56 basis points. Currently, we're down about 25 basis points from where we left off yesterday. But we're still sitting up this double floor support here with the Fibonacci as well as the 50-day moving average, which will give us a floor of support here. But one of the concerns we have is we've been kind of looking at these stochastic crossovers, and they've been pretty accurate on these. Anytime there's been a crossover, the market has swing, and it looks like there could be a possible crossover in this direction. So if that happens, the trend would be, the stock market would quickly end its run up and maybe, drop back down again. So something to keep your eyes and ears open, but definitely might want to look to capture the gains we had today. Again, these geopolitical stuff could keep popping up and create more havoc, which would support bonds, and of course at the expense of stocks. But again, these could be little patterns that go up and down here and there. And while we're up, may want to capture any gains we had captured before we drop down further. Capture the short-term gains here. Here's the Treasury markets. It looks like we broke above the 100-day moving average. As you saw, we dropped well below it, and we're on further.